What happened yesterday in Japan has nothing to do with the Senate, nothing to do with today's market structure roundtable in Washington, nothing to do with the Federal Reserve. And that is exactly why almost nobody on Wall Street priced it in. 44 million people in Japan just got XRP in their wallets, live yesterday. Not in a pilot, not next quarter. They can spend it at 5 million stores. $23 billion of loyalty points now flow directly into a single cryptocurrency. And in the same few weeks, something else happened that almost no crypto channel connected to it. The people who were speculating on XRP, the leveraged traders with borrowed money, they quietly left. 73% of them gone. The speculators walked out. 44 million actual consumers just walked in. That is not a news cycle. That is a changing of hands. So let's break it all down. Rakuten is not just a Japanese tech company. Rakuten is Japan's Amazon, PayPal, Verizon, and retail bank rolled into one account. 70 services under a single login, more than 100 million members. On April 15th, Rakuten Wallet connected XRP directly into Rakuten Pay, the payment app accepted at 5 million merchant locations across Japan. Not exchanges, not specialty wallets, convenience stores, drugstores, restaurants, train stations, regular shops that regular people already use every day. 3 trillion Rakuten points sit in circulation right now, roughly 23 billion US dollars in stored consumer value. Until Wednesday, all of it was locked inside the Rakuten ecosystem. You could buy sushi with it. You could book a flight. That was the menu. Starting April 15th, every one of those points can flow into XRP. By comparison, every American spot exchange-traded fund holding XRP combined manages about $1 billion today. Rakuten just opened a door more than 20 times larger than the entire United States ETF market. Ripple's senior ecosystem growth manager Tatsuya Kurogi publicly called it, quote, one of the most significant XRP milestones. Those are his words, April 13th. 5 days before the launch, Japan changed the tax math. On April 10th, the government approved a bill cutting crypto capital gains tax from as high as 55% to a flat 20%. A Japanese holder used to keep 45 cents of every dollar gained. Now they keep 80. That turns point converters into long-term holders. Rakuten also confirmed a bank integration rollout by the third quarter of this year, seamless fiat to XRP conversion for another 17 million banking customers. Wednesday to Friday, 72 hours, the price moved 3 cents. If I stopped here, you would walk away thinking this is the cleanest bull setup in crypto. That is exactly why I won't stop here. Because the other side of this ledger is the reason the price is not at $2 right now. The money flowing into XRP investment products tells one story. For the week ending April 11th, CoinShares recorded $119.6 million in net inflows into XRP-linked funds. The strongest weekly figure since December. 7 spot exchange-traded funds now trade on United States exchanges, with combined assets of about $1 billion. Whale wallets, addresses holding more than 1 million XRP ETH, hit a 10-month accumulation high. Retail wallets holding under 10,000 XRP have been shrinking for 6 straight months, the longest retail selling streak since 2014. Here is the number no one is pairing with the Rakuten news. Open interest in XRP futures peaked last year at $10.8 billion. Today it sits at $2.4 billion, a 73% collapse. That is roughly $8.4 billion of speculative positioning, leveraged bets, borrowed money trades that walked out of this market in a few months. Think of XRP's recent price chart as a casino floor. For most of the last cycle, it was packed with traders betting on 24-hour candles. Today, most of those chairs are empty. 2 days ago, Rakuten opened the doors to a grocery store next door with tens of millions of shoppers who already live in the neighborhood. Ledger metrics line up. Exchange reserves of XRP dropped to 46% of circulating supply, down from above 50% at the end of last year. 4 billion XRP have quietly left centralized exchanges since October. tokens moving into private wallets and sitting there. The ledger itself got 2 institutional-grade upgrades in the same week. On April 14th, zero-knowledge proof technology launched on the XRP ledger through XRPL Commons and Boundless. In plain English, regulated banks can now settle confidential transactions on the public chain. 3 days earlier, Société Générale's crypto arm deployed its euro stablecoin on the same ledger, the first major European bank stablecoin to land there. This is what it looks like when speculators leave and structural capital arrives. And here's the part every XRP holder who has waited through years of the company winning while the token waits should not miss. Rakuten did not need Ripple's permission. Rakuten Wallet has publicly clarified this was their independent decision. For the first time at real scale, XRP's adoption story is not downstream of Ripple. It is downstream of a consumer platform choosing this asset on its own. Here is the part where I might lose some viewers, but I would rather lose viewers than mislead them, because every number I just showed you is competing with one force bigger than all of them combined. That force lives in Washington, the Federal Reserve. The Fed sets the base interest rate for the entire United States economy, the cost of every dollar borrowed. High rates act like gravity on speculative assets. They pull everything down regardless of fundamentals. And XRP, no matter how many Rakutens sign up, is still classified by every institutional model as a speculative asset. The federal funds rate is 3.50% today. Every major Wall Street model at the start of this year expected 3 to 4 rate cuts by April. 0 have arrived. Wholesale prices, what businesses pay before you see them on store shelves, keep running hotter than expected. Core inflation is not cooling the way it needs to. Then there is oil. On April 7th, the United States and Iran announced a ceasefire. XRP rallied 5%. 5 days later, the Islamabad peace talks collapsed after 21 hours. The U.S. ordered a naval blockade near the Strait of Hormuz. Oil spiked back above $100 a barrel. Higher oil feeds inflation. Higher inflation gives the Fed another reason to hold. The ceasefire formally expires on April 22nd, 6 days from now. Standard Chartered's Geoffrey Kendrick reacted this month. He cut his 2026 XRP target from $8 to $2.80. Still 107% upside from today, but the cut is a statement about gravity, not about fundamentals. He pushed the destination further out on the timeline. Alex Karshidi at The Motley Fool published the counter case this week. He projects XRP falling to $1 by year end. His argument, the exchange-traded funds have not moved the needle, the bridge currency story is weak against stablecoins, and without a specific catalyst, price drifts down. Now the math, almost nobody is pairing up? Start with the speculators who left. $8.4 billion of leverage positioning walked out of XRP futures in the last few months. That money is gone, not sold back into the market, just closed out positions. Short-term, candle-watching, borrowed money bets, no longer driving price action. Now add what Rakuten just wired in. $23 billion in convertible loyalty points pointed at XRP, with a promo campaign offering up to 100,000 yen, about $630, in XRP rewards for qualifying purchases through May 15th. Rakuten spent real money to get points holders to convert. The math is uncomfortable for both bulls and bears. If only 3% of those loyalty points flow into XRP, that is roughly $700 million of new structural demand from buyers who are not trading, they are spending. If 5% convert, it is over $1 billion. If 10% convert, it is $2.3 billion. That is real buying from a cohort that did not exist 72 hours ago, showing up on a chart with no derivatives froth to absorb it. Speculators absorb volatility. Consumers do not. When real-world demand lands on a thinned-out order book, price moves differently. Add the 17 million Rakuten Bank customers arriving in the third quarter with seamless fiat to XRP conversion. The pipe Rakuten built is designed to keep filling for another 6 months minimum. That is why the Standard Chartered target cut reads less like a downgrade and more like a time shift. The destination moved out. The pipeline is thicker than it was 3 days ago. This is where I check myself, because confirmation bias kills portfolios. I just listed 12 bullish data points. The price chart has a memory longer than any press release, and it still says the trend has not turned. XRP sits below its 50-day moving average at $1.38, below its 200-day moving average at $1.88. A death cross has already printed on the chart. The relative strength index sits at 38, weakness, not capitulation. The path to $2 has 3 locked doors. Here is what it takes to open each one. First door, $1.42. That is where the Rakuten rally peaked Wednesday. 60% of XRP's circulating supply was bought between $140 and $170. Holders waiting to break even will sell the first chance they get. Second door, $1.45. Every rebound since March has stopped here. This door needs a catalyst bigger than a headline. A confirmed Senate markup date would qualify. A clean rate cut signal from the Fed would qualify. Third door, $1.88. The 200-day moving average and the exact level where the death cross invalidates. Above it, the long-term trend flips. Below it, institutional models stay underweight. 4 signals worth watching over the next 3 weeks. Signal 1, a confirmed Senate Banking Committee markup date for the Clarity Act inside the final 2 weeks of April. Polymarket currently prices a 72% chance of passage in 2026, up from 60% 1 week ago. Signal 2, Rakuten promo campaign conversion data. Watch how many Japanese users actually move their points into XRP before May 15th. That is the real demand signal. Signal 3, a daily close above $1.42 on above average volume, held for more than 1 session. Signal 4, the Federal Reserve's May 6th and 7th meeting. A clear signal of at least 1 rate cut before end of summer is the macro trigger. Bull case attributed. Geoffrey Kendrick of Standard Chartered projects $2.80 by year end if the Clarity Act clears committee and the Fed cuts at least once. Ripple CEO Brad Garlinghouse publicly estimates 80 to 90% odds on the bill by late April. His words at the Semaphore event in Washington on April 13th. Bear case attributed. Alex Karshidi at the Motley Fool sees $1 by year end. Sam Dowdu at 24/7. Wall Street sees $1.15 if the markup slips past May and the Gulf War escalates. You don't need to guess, you just need to watch these signals. Speculators left, consumers arrived. The price chart has not caught up yet. Tomorrow, the first post-roundtable commentary from Securities and Exchange Commission Chairman Paul Atkins hits the wires. The question nobody can answer until then, did today's roundtable produce a concrete timeline for the Senate markup, or did it punt? I will have the quotes. I will have the market reaction. This content is for informational and educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. Fundamentals set the destination. Macro sets the timing. Stay sharp, stay informed.